This conference will now be recorded.
Good morning, everybody. Thank you for joining us this morning. Now's probably a good time to get started. We've got a nice audience. Before we begin, just to let you know, the webinar this morning is being recorded. So if you do miss anything, it will be posted onto our website, likely to be tomorrow. So if you miss anything or need to share with colleagues, you'll be able to do it through that avenue. I do ask that everyone stays on mute for the duration of the webinar, so there's no feedback or any interference. Also, if you could keep your webcams off, that would be great. The webcam recordings do go along with the recording, so it'd be best to keep the webcams off. Before we begin, we do invite you to follow us on our social media channels. So on Twitter, we are at RHA News and Road Haulage Association on Facebook. We also have our Roadway Live app. This app is available in both Android and Apple stores, so do give that a download. You will find all useful information on there that we have on our social media channels, so latest industry news, traffic commissioner updates, information on RHA events, information on the kind of things we're doing for the industry, so policy updates there as well. As I have already mentioned, everyone has been muted and we are being recorded today. Today's webinar is Driving Your Business Forward, Key Facts on CBILS. This is brought to us by Tom Brown, who is the director at PMD. So what I'm going to do is I'll pass over to Tom now, who will give today's presentation.
Thanks for the introduction, Josh. Can you hear me okay, yeah?
I can hear you fine, yeah.
Good, right, bear with me for 1 second while I share my screen. Does that come up okay?
Absolutely perfect. I'll leave it to you.
Thank you. Yeah, good morning, everybody, and I hope you're all keeping well in the latest lockdown and the new challenges it's presented for many of us SMEs. The presentation today really is just around giving people a few key facts around the CBILS scheme, some of the criteria, what you're eligible for, and how you might access the scheme. So without further ado, so yeah, a little bit about PMD, the availability of CBILS funding and banks, some of the alternative finance providers, CBILS facilities that are actually available to SMEs in the market at the present time, and a bit of information around eligibility and timescales, because the goalposts keep changing and eligibility criteria is varied across the board, is probably the best way of describing it. And then, look, if you've got any questions, then please don't hesitate to ask me at the end or contact me after the seminar or the webinar, and I'll do my best to help you where I can. So a brief bit around PMD. We're established in 2010 and one of the UK's largest independent commercial finance intermediaries, specialising very much in asset finance, which has led us quite heavily into the transport and haulage sector. We work with over 3,000 operators, providing help, support and funding guidance where we can, and a number of equipment suppliers, the trailer manufacturers and commercial vehicle suppliers. So some of you may have come across our name at a point of sale proposition when you're looking to buy a truck or a trailer. We've stayed extremely active and proactive throughout the pandemic, not furloughing any of our staff and really trying to be here for our customers at a time when they've needed us the most. But that's enough about PMD. So CBILS and the availability of CBILS, so banks versus alternative finance providers. So if we start maybe back in March 2020, which is almost 12 months ago now, there was probably sheer panic and blind panic really from SMEs and operators around coronavirus, their impact on the business and what the future held for them. There's a few things that businesses could do at that moment in time: furlough your staff, defer your VAT, and one of the key ones was obviously take holiday payments from lenders on hire purchase and finance lease arrangements. Rishi Sunak obviously announced not long after lockdown the CBILS scheme, or the Coronavirus Business Interruption Loan Scheme, and at that stage really it was available through your high street bank. There weren't many other alternative finance providers who were accredited to provide the funding, and you know I've worked for one of the high street banks myself until 6 years ago, and a lot of banks over the past 6 years have downscaled and downsized in terms of resource and feet on the ground and relationship managers. And then they're suddenly left in a conundrum, really, where they needed people to support UK SMEs and support businesses, which left a kind of a huge gap. Stories of people being on the phone for 3 or 4 hours to the banks and not getting anywhere. Don't necessarily blame the banks. It's probably a result of really trying to reduce the cost base over the last few years and not having feet on the ground to help people. Similarly, at that moment in time, some people actually banked with banks who didn't have access to the CBILS scheme. So there was a real cry for help in the SME community, in particular haulage and transport businesses, as to where they can access funding and support and guidance through this difficult period. Not long after the CBILS scheme was launched, a number of alternative finance providers, so kind of challenger banks and tier 2 providers, applied to be accredited onto the CBILS scheme, and it was only really at the end of April that we started to see more and more lenders who maybe are tech businesses, or fintech businesses who can access funds quickly and make decisions quickly on behalf of businesses start to get accredited, and that's when we started to see more money get out into the marketplace to support businesses. Around that time, the Chancellor obviously announced the bounce back loan scheme, which was much more accessible for businesses and much quicker for businesses to access, with a few questions that you needed to answer online and the money was in your account the next day. The bounce back loan scheme had a real effect on the finance marketplace at that moment in time and give businesses quick access to liquidity. The downside to that scheme is it was a maximum lending, or still is a maximum lending, of £50,000, which for a small operator operating a couple of trucks, maybe a one-man band or a sole trader, that £50,000 a real help. For some of the larger operators, it was a drop in the ocean, probably is the best way of describing it. So some people have had to look at refinancing their bounce back loan onto a CBILS loan and get more access to money, particularly as the pandemic's gone on and the timescales have got lengthier and lengthier. It's important to note here that you cannot have a bounce back loan and a CBILS loan at the same time, but you can refinance your bounce back loan with your CBILS loan. So some of the key features of CBILS, these are kind of the across the board features that the British Business Bank have put in place for lenders. Lenders have then interpreted and can dictate their own credit appetite or their own underwriting criteria within that, which is where we see quite a lot of discrepancies and variance in degrees of credit appetite across the board. So the CBILS scheme is available for businesses to borrow from £50,000 up to £5 million. There are flexible payment terms with potentially no capital payments for 12 months on the majority of facilities, but not all facilities. The maximum term is still 6 years. Rishi announced towards the back end of last year that lenders could adjust the term of up to a maximum of 10 years if they needed to do for existing agreements, which kind of created some confusion in the marketplace that CBILS was now available over a 10-year term. It's not, it's still a 6-year term, but the 10-year gives the lender the ability to rejig the agreement partway through if customers having difficulty. As I said before, you can potentially pay nothing for the first 12 months. So, a lot of businesses are kind of taking the cash whilst it's available. They might not need it right now, but they're taking the money, they're letting it sit in their account to there is a bit of a war chest for anything which may crop up over the next 12 months. Or certainly since the start of 2021 and the current lockdown, is some of our customers, some operators who didn't need the CBILS funding last year are now looking at it and going, oh, do I need to get something in place? Basically, this isn't letting up and it looks like it's going to continue for some period of time. So whilst the scheme's available, shall I get the money? Shall I let it sit in my account? And you don't have to pay anything on it for 12 months, which is obviously a great help. With all CBILS facilities, the first year's interest and fees are paid by the government, so that is across the board. There's no personal guarantees, or no lenders can take any personal guarantees on any CBILS facility up to £250,000. They do have the ability to take personal guarantees capped at 20% or other security, provided it's not your residential property, on lends over £250,000. And I think the important thing to note more than anything is that, there's been a lot of talk around free money. This isn't free money. It's 80% backed by the government under the CBILS scheme, 100% backed by the government in terms of a guarantee under the bounce back loan scheme. But you as the SME and the operator remain 100% liable for that debt. And the expectation is that you will repay the lender that debt. And in the event that you can't, or the lender's explored every option to recover that debt from you, then that's when they can go to the government to claim the guarantee. So it's not a case that the government will just step in and pay your debt off for you in the event of any difficulty. So it's not free money like some people have kind of advertised or mentioned on various social media channels. So what CBILS facilities are available to SMEs? This is something that we've probably found over the last 6 months. Everyone thinks CBILS and they think business loans and they think an injection of working capital. CBILS is absolutely there to support working capital and people who've lost turnover, who've got late payers, their working capital has been impacted. That's absolutely what the scheme's there for. But the scheme is also there to support expansion and growth within businesses. And what we've seen over the past 9 months is that operators and a lot of transport businesses have been extremely resilient and almost diversified what they're doing to sectors which are more aligned to key worker sectors to keep themselves going and found new revenue streams. That's when they've needed to invest in the business in different areas, whether it be a different type of trailer to service a different type of work. And CBILS, the perception is that CBILS is there for someone who's really in difficulty because of coronavirus. It's not. It's there to support businesses that are growing, who are keeping the economy going as a result of coronavirus and the result of them diversifying. CBILS is readily available in the asset finance marketplace, which not a lot of operators and SMEs are aware of. So that's kind of the key for the government to keep the economy ticking over, keep units being manufactured, keep trucks and trailers being manufactured. So CBILS can be used against asset finance purchases and not in the sense of a business loan, in the sense of a hire purchase agreement or a finance lease agreement, whether that be for used or new equipment. The same principles apply. Your first year's interest and fees are covered by the government. And typically on a hire purchase agreement, on a 3-year hire purchase agreement, 50% of the interest is payable in the first 12 months because of the way that the interest is accrued. Now, that's the bit that the government are paying. So you can imagine these facilities are becoming very, very cheap and competitive for people who are in the fortunate position who want to go out and invest in the fleet or diversify into a new area and need new plant machinery or equipment as a result of it. So please bear that in mind for any plans that you've got for 2021. Asset refinance and restructuring. So what we saw really in April, May, June, because of the measures businesses have put in place, furloughing the staff, deferring the VAT, and taking hire purchase or finance lease holiday repayments, people didn't quite know exactly what the business looked like at that period in time. It was really towards the back end of the summer, August and September, when we saw HP lenders becoming a fair bit more aggressive with wanting repayments, whether it's 100% repayment or 50% repayment of their monthly repayments. And that's really then where we started to see businesses looking more around the medium and long-term cash flow and financial makeup of the business rather than kind of the short-term, I need £100,000 working capital and cash flow. So asset refinance and restructuring CBILS can be used to really look at as I said, the medium and long-term picture of your business. How much debt are you servicing at the present time? What does that look like going forward? What does that look like if there's a downturn in 2021? Will you be able to service your current HP payments? So a lot of operators are using the opportunity now to restructure, basically. There's a firm based locally to us in Manchester who, to quote them, they said it wasn't what was coming in which was hurting them, it was what was going out, what was killing them. They were servicing £38,000 a month in HP payments. we managed to refinance their fleet under a CBILS asset finance or asset restructuring package, which released £200,000 cash at day one against the assets, but also reduced the payments to zero for the first 12 months. So they went from £38,000 a month to zero payments for 12 months, then creeping back up to £16,000 a month in year two. So they've really safeguarded themselves, certainly for the next 12 months, but for the next 18, 24 and 36 months as well. My advice to businesses at the minute would be don't necessarily look at the here and now and the bills that you've got to pay this week and tomorrow. Look in 3, 6, 9, 12 months time and what the business might look like if there is a bit of a downturn or a dip in the economy, as there may well be, and start to put the measures in place now whilst this scheme is still available. Property finance and invoice finance. So CBILS is available in the invoice finance sector for those people who are struggling from a working capital perspective. Under CBILS invoice finance, your fees and interest again are paid by the government. So in essence, for 12 months, it's a free invoice finance facility. Property finance for people looking to purchase their own property, not necessarily for development or investment purposes. And we've also found, certainly over the last 6 to 9 months, that some businesses are acquisitive. There's a number of SMEs and operators who've had enough, is probably the best way of describing it, and they're looking to sell, whether that be via management buyout to the existing management team, or via a trade sale to another larger operator. CBILS is available to support these transactions, and what it's allowing lenders to do at the present time is really stretch the credit appetite out by using the assets, whether it be plant and machinery or the debtor book of the target business or your business if you're looking to sell it, to leverage against and provide funding to support these transactions. So if you are acquisitive, then now's the time really that you might want to look at some smaller operators who've suffered as a result of the pandemic and who may look to sell. There's an opportunity there for businesses to grow at the same time via acquisition. A couple of things to be mindful of at the present time in 2021. Obviously, annual investment allowance has been increased or maintained at £1 million throughout 2021. So if you are in a fortunate position where you're looking to invest in the fleet and you're looking forwards in the business, now's a good time to do it. With annual investment allowance being increased and the rates and terms that are available under CBILS asset finance, start to think about your plans for the year and your replacement strategy with your units, what you're looking at the fleet, which is looking a bit old and knackered, and can it be replaced by something, and can you make the most of the schemes that are available at the present time? There are rumours of potential rise in capital gains tax in Rishi's budget in March, which may mean anybody looking to sell their business maybe penalised with 40%, 45% tax rates instead of the current 20% tax rates that are available under CGT or capital gains tax. So again, something else to bear in mind. There isn't a lot of time, but there is still time to do something if you're considering it. And just to reiterate that message again, it's start to look at the medium and long-term working capital requirements of the business in your business strategy rather than the here and the now. I appreciate that's difficult to do as it is for all of us at the present time, as we get dealt hammer blows on a weekly basis around the environment that we've got to work in. But try your best to plan for 2021 and see where we might be able to help you. Moving on, so eligibility and current timescales. So as I said at the outset, kind of the British Business Bank have put a core set of eligibility criteria in place, which kind of highlighted at the top of this slide. So you must be a UK-based business supporting UK-based business activity. That said, under asset finance CBILS, you can still purchase equipment from Europe, from overseas, which will still qualify. You have to have an annual turnover of less than £45 million. You have to have a borrowing proposal that a lender would have considered viable were it not for the pandemic. So if you were a business in distress or part of insolvency proceedings prior to the pandemic, unfortunately, you're not going to qualify for CBILS. You need to self-certify that you've been adversely impacted to some degree by COVID-19. That could be a loss of turnover. It could be slow payment from some of your debtors. It's quite woolly, but you're self-certifying yourself that you have been adversely impacted to some degree. As I said before, really, the lenders have got to interpret these rules. These are the rules they've got to stick to, but then they can kind of make up their own underwriting criteria, which is, I think that's the thing that's led to frustration with a lot of SMEs across the board. The perception is, you're getting a government guarantee. Why do I need to tick this box, and this box? But unfortunately, that's the autonomy that the BBB, the British Business Bank, have give lenders to kind of decide themselves. And because the marketplace is awash with people needing funding, it's allowed some lenders to be stricter than what they normally would be without much justification. Our job as an intermediary and dealing with over 100 finance companies is to understand the individual criteria of each of these businesses and help you navigate your way through them to the right people who can help you ultimately. So in terms of deadlines and timescales, the original deadline was 31st of September for CBILS to end. That got extended to the end of November, then to the end of December, and now it's currently the end of March. So, the deadline extension correlates exactly with lockdowns, restrictions, and more things being brought in. So whether this will get extended again, I don't know. But the deadline is absolutely at this moment in time for submissions to lenders, the 31st of March 2021. Lenders then have 2 months to underwrite the proposal, not that it should take them 2 months. A lot of lenders we deal with is, getting turnarounds in 24, 48 hours. With a view then that any loan facilities are valid for 1 to 3 months, again, depending on the lender, which kind of takes you to the summer. And any approvals on asset finance and refinance are valid for 3 to 6 months. So kind of taking us towards the back end of the year, really. So if you do have plans to replace the fleet or restructure the business, it doesn't need to be done before the 31st of March, but you need to start thinking about it and get applications in prior to the 31st of March. I think it's important, again, to reiterate that you can have multiple CBILS facilities. You can have a CBILS loan, you can do a CBILS refinance, you can have CBILS invoice finance, and you can go out and replace your fleet backed by CBILS as well. I think some businesses are under the illusion that if I've had a CBILS loan from a bank, then I can, I've had my fix of CBILS or my fill of CBILS. That's not necessarily the case. There's more available to you, subject to individual eligibility criteria from lenders. Some are capping at 25% of turnover, some are capping at 2 times your annual wage bill, and some are just saying that it's because it's sufficient for your liquidity needs for the next 18 months. So don't make any assumptions is probably the message around either I am eligible or I'm not eligible, or I've had enough CBILS or I can't have any more CBILS. Speak to us, and if there's a way that we can get you more CBILS funding and it's the right thing to do for your business and it will work for you, then we'll navigate you through to the right lender to help. I think that's it in the main. I saw an article before Christmas that just before Christmas that 84% of businesses, UK SMEs, will still look to apply for CBILS before the scheme finishes. That means there's going to be a big influx of applications as we head towards the 31st of March. Start thinking about it now and start getting your application in earlier whilst lenders have a bit more time to consider, and we can make sure that we get the proposal and the financial information right to get it right first time. As I said, if anyone's got any questions whatsoever, or we can help you with your current finance arrangements, give you some advice or advice, given how close we are to the finance marketplace, then this is the service that we want to offer our HA members as part of our partnership with them. So yeah, that's it from me. I didn't want to make it too long, but hopefully it's give a few people some nuggets of information that they didn't know prior to this call. Thanks for your time. Back over to you, Josh.
Tom, thank you very much. Brilliant there. We have got a few questions come through, so I'll just ask those on behalf of the attendees. And just to reiterate, while I am asking these questions, if anyone does have anything, pop it in the chat box. And while we've got Tom on, we might as well use his time up, as it were. Tom, first question is: are you finding that some businesses are utilising the scheme to build up a bit of a cash war chest in anticipation of challenges that may lay ahead this year?
Yeah, absolutely. I mean, some businesses have had a reluctance to take on more debt, which I completely understand. But with some CBILS facilities, not all, then please be mindful this isn't all, there's no penalties for settling the agreements early, particularly on the business loan side. And you don't make any payments for 12 months, and the government pay your interest in the first 12 months as well. So if you wanted to take out a CBILS loan of a couple of £100,000, you could leave that money sat in your account for whatever may or may not be around the corner. As long as you settle that facility off at month 11, which is the point that the government is paying your interest still in year one, you just repay the capital, so you just pay that money back. And obviously, if you need the money further down the line, and it'll kick in and you'll start making the monthly repayments. But there's no harm, I suppose, in taking the money if it's the right thing to do to try and mitigate any eventuality further down the line. Some businesses went from stockpiling toilet rolls 9 months ago to stockpiling cash, in all honesty, and trying to pile up as much cash as they possibly can whilst these schemes are still available. So yeah, absolutely, that's what people are doing.
Thank you, Tom. Next question is, what key tips do you have around presenting a proposal to lenders to help secure funding at the present time?
I think you need to be considered. You need to be considered in your approach. I think I alluded to it in the presentation. I think there's some perception from SMEs that you're getting a government guarantee, so why do you need my inside leg measurement to underwrite something? Lenders still have to demonstrate to the British Business Bank that this is a proposal that they would have underwritten prior to COVID-19, and despite the government guarantee. If they can't demonstrate that to the British Business Bank, their guarantee could be void, hence the reason that there is still quite a few layers of due diligence required. Having the right financial information has probably become more important than ever over the past 12 months. If you didn't keep management accounts prior to COVID-19, my advice would be start to produce them, or work with a more sophisticated accountant who can help you produce management accounts and forecast your business and manage risk properly. And if you can go to a lender with accurate and up-to-date information, you've got a much more compelling case to secure funding, rather than accounts that are now 18 months old and represented your business prior to COVID-19. If you can't show a lender at the minute how your business has been impacted or what you've been doing since COVID-19, you're going to struggle to secure funding. So the right accountants who are producing the right information for you are key to me at this moment in time.
Thanks, Tom. We've got a couple more. So we've got, do you anticipate there will be a scheme that replaces the current CBILS scheme after the 31st of March? If so, what do you think it might look like?
Yeah, so I was on a webinar or a conference call with the British Business Bank just prior to Christmas, and they've alluded to the fact that there will be a successor scheme to CBILS in some guise. There's an acknowledgement from the government that they need to continue supporting those who are impacted with working capital, and also they need to continue stimulating growth in the economy. And lenders are going to need to have the comfort to lend to businesses, and that's going to be varying degrees of appetite over the next 6, 9, 12 months. So CBILS is going to exist in some guise. We know that. It might be similar to, I suppose, to when furlough went to job support scheme. It was there, but it wasn't attractive. Whether that means less of a guarantee from the government, or maybe interest and fees not being paid for you on behalf of the government, I don't know, is going to truth. And they've alluded to the fact there will be a scheme, but not any clarification as to what it might look like. We can only assume it will be less beneficial than what the scheme is at the present time. This is as good as it's getting. So if you are considering, as I said before, act before the 31st of March, ultimately.
Fantastic, Tom. And finally, we've got how do I change from a BBL scheme to a CBILS scheme?
So what you need to do is your bounce back loan or your BBLS facility essentially has to be refinanced as part of your CBILS facility. So as a lot of operators did last year and a lot of businesses, they took the £50,000 bounce back loan. It was sufficient for them last year. It's not sufficient anymore because of the continued lockdowns and pressures that puts on businesses. Unfortunately, the cap with a bounce back loan is still £50,000, despite the fact that this has continued for the amount of months that it has. So if you need further working capital, you need further support, you need a CBILS facility. If you take out a CBILS facility, one of the conditions is you have to settle off your bounce back loan facility. So if you think you need another £100,000 of working capital and you already have a bounce back loan of 50,000, you need a CBILS facility of 150. 50 of it to pay off your bounce back loan and £100,000 to go into your working capital. Essentially, I hope that answers the question.
Fantastic. Thank you, Tom. That's the last of the questions I've got so far. What I'll do is I'll just take back presentership. I want to thank you for hosting today on behalf of the RHA. So yeah, really appreciate that, Tom. And just to anyone watching now, I'll keep this screen up now while everyone leaves. If you do have any questions, you can pop them in the chat box and I can pass them to Tom after the webinar. Or alternatively, if you've got a question you'd rather ask that you don't want to ask in a public forum, Tom's details are there and I've spoken to him beforehand and he's happy to take any questions or anyone to make any contact with him if they so wish. Okay.
Thanks, Josh. Appreciate your time.
No problem at all, Tom. And yeah, thank you everyone for joining. Have a lovely day. Cheers.
Thank you. Bye-bye.